I'm Jim Jubak, and welcome to this week's Quick Pick video, Kroger. Now, Kroger is the country's largest standalone grocery store company. It has about 2,800 stores. But you don't think of grocery stocks as being particularly volatile, going up or down. Yeah, but not big. Yet on Friday, September 9th, the stock went up almost 7.5% one day. And it's because of, well, what I guess you'd call scarcity of supply. Not scarcity of supply of groceries, but scarcity of supply of stocks that might do well in a recession and an inflationary environment. And Kroger's proof in second quarter earnings that it fit that bill. So you got a lot of people going, yes, this is what I want to own during this period. So let me tell you why. So what Kroger is seeing, what a lot of grocery stores are seeing, what big chains are seeing, is that as the inflation creeps up and as the economy slows, people are making decisions to go and try to find cheaper brands. So Kroger is saying they're seeing a big increase in sales of store brands. Now, store brands are cheaper to the consumer, but they have a bigger profit margin for the grocery store. So what you got in the second quarter was that Kroger said, hey, we saw about 5.5% to 6% top line growth across the business, but what we saw was store brand sales up about 10.2% year to year, so better than the whole company, and that increased profit margins. So you're looking at a 14% increase for the second quarter in operating margins, and everyone said, hey, since we really don't think that this is going to change in the next quarter or two, this is a stock I'd like to own. Now, you had some profit taking on Monday. The stock dropped about 2.5%, and a little more on Tuesday, but it still looks like a pretty good stock to own for like the next couple of quarters for an inflationary and recessionary environment. So let's look at the chart for a moment. Okay, if this is a year-long chart, the stock is up about 12% for the year. You notice that had a big high and then came back down. But what's interesting is that here, which was the high on that Friday, you got up a little over 50 something, 51. There's resistance at 55. You get support down around 46. So I think we've got, now that we've dropped back to 50, there's a good 10% more in that stock. The stock also pays a 2.06% dividend. So in the short term, next couple of quarters, I think this is a good inflationary, recessionary counter stock to own. And I'm going to add it to Jubak Picks after this video is posted. Thanks very much for watching. If you like this video, please give it a thumbs up. Subscribe to my YouTube channel. That way you get notification when we do the next one of these videos. And I'm doing about 3 a week. If you want more of my stuff, including the portfolio in which Kroger is going to take up residence, you can go to my free site, jubakpicks.com, for 6 portfolios instead of 3, which has got some ETFs, some options, some reverse ETFs, stuff that's appropriate for a bearish environment. You can go to my paid site. That's jubakpicks, that's jubakam.com. You can find links to all that down below. Thanks very much for watching.